Good day, all. Ira Epstein of Linn Associates with your agriculture update. And this update is for Thursday, the 30th of May, 2019. Now, before we get too far, tomorrow's the last day of our sale on my charting course. So if you want to learn what I teach, it's really a great time to do it. The course is normally $169.95. For the sale, it's $99.95, and then I'm putting the price to $179.95, almost 50% off. So if you're going to take advantage of it, this is the best time you can do. Now let's talk about weather. We got a weather market, and that's exactly what you have in the grains. Look at this explosion. And that's because you would think these forecasts would get tamer, milder in terms of the moisture, and they just haven't. I don't know what will happen over the weekend. I don't know what the 10-day will be as it keeps getting revised through there. But right now, farmers are having a heck of a time getting in the field. A lot of them, for the prevent planning, have to make a decision by tomorrow on corn, depending on the counties and regions that they're at. That's going to be very, very important. So the volume over the top, people just looking at it, and you'll notice today that the meat markets collapse. You know, the cost of grain is going up so much that on the meat they're going, wait a minute, I didn't count on this happening. I didn't think my feed cost on a bushel of corn was going up 80 cents in 3 weeks. Give you an idea of what's going on. It's having an impact. Stock market held up today, dollar index still strong, and we're still seeing that interest rates are continuing to fall. Now today, when you saw the EIA numbers come out, and of course you're getting the slowing of a global economy, look at how energy prices came crashing down, 4% almost today. So when we look at soybeans, one of the numbers you and I had been talking about was, could the market get back up to the 18-week moving average of closes? And by golly, there it is. Now, I do expect that this is an area the pros are looking very hard at and taking advantage of in terms of hedging. That doesn't mean anything, because weather markets can carry a market anywhere. 5 decades in this game, I've seen things happen. But here's what happens in a weather market that's a negative. They just end. All of a sudden, you don't realize the market's gone into that retracement. Before you know it, it's 20, 30, 40 cents in these markets. So please be aware of that. We have 2 gaps in this chart now because it held up today that are important. We have what's called a breakaway gap. And today, confirmed because it didn't fill the gap, we have breakaway, runaway. Now, there is a third gap that can happen. And if you were to gap out of here, say, tonight, it'd be called an exhaustion gap. And wherever it's going to peak out, that's where you're looking for the market to come back. But this market has been going in a way that it's gone straight from 817 to 892 without a pause. I mean, that's a dramatic move when you look at how much this market has gone up without China in the market. Now, the big question will be, well, we're going to have a lot of excess beans. Are farmers going to plant them? What are they going to do because of these costs? And you're getting to that point where decisions have to be made. In terms of where might the market go, well, the 100-day average is the last resistance I have here because you're already over the Bollinger Band. What you did over the past day or so was you got over the band, you came back today to challenge it, and the market just couldn't stay down there. It went back up and through it, as you can see, and it's overbought. An overbought market that's rallied practically 80 cents, the next spot, 902 level. I'll be surprised if you don't see some hedging come out there. Can you catch the top in a weather market? I don't know how. It's just that simple. You've got a group of people caught the wrong way with livestock, I think, that were long livestock in some manner, short feed costs, and they're all turned the wrong way. In the meal market, you've got the same thing. You do have a gap in the chart here. You've got another one up here, right through there. So you've got your 2 gaps. You came back to challenge it today, and the market held nicely and stayed strong as can be going right into the close. Again, overbought. Can we get into an exhaustion gap? If you saw that the weather tonight were to say more rain coming, you close near the high of the day, yeah, why not? The soybean oil is the tail. So the dog and the whole body of the dog are the meal and the soybeans, and this market's getting pulled along for the ride. It's got the lower low, higher high, and it's staying so far within the Bollinger Bands, and why should it be left behind? It too is in an overbought area with readings over 70. Now in the corn market, we have been fighting day in and day out against this Bollinger Band, but you know what I'm going to tell you? As long as you keep the embedded reading, I'm friendly. It's telling you that momentum is saying that on the pullbacks, the pros are still buying this market. That's what I'd read it. In wheat, you have a market that has still got both numbers today over 80. They were both not over 80 yesterday, not. Over 80 the day before, not the day before. This is just an overbought market that is now paying very good attention to the Bollinger Band and the 100-day average, since it was the biggest moving average under the market, the closest is what I mean by biggest, right there. That's the first layer of support. If it were to break more, this could be the second layer. But if you're going to take corn and beans higher, and I'm not saying you are, but if you were, I wouldn't imagine this gets hurt real bad. The sugar market doesn't want to break through just yet the upper Bollinger Band. It is in an uptrend with higher lows, higher highs, and it pulled back to what I call that line in the sand where it's going to decide what to do next from that 18-day average of closes. In the coffee, I am surprised, big time. I thought yesterday would be enough for this market up to the 100-day average. I'm not right. The market went another 3 cents through it. So we're going to look back. And unless you have a way of getting under these lows, we're going to say that this market's made very, very significant lows. You don't have to trade July. You can move out, further out now in these markets too. But that's what I'm thinking the market has done. And these are the die-hard shorts that are probably coming out. I have not heard any weather stories on the coffee market to do that. I just think it's cleared all these people. And anyone that's been short, just look at back in the prices, they're underwater on this trade. In the cocoa market, you're getting to the point where you need to keep momentum up, because if you lose the embedded reading, if that red line gets and closes under 80, then I look for price and the 18-day average to come together. Until that occurs, when the market reopens, the traders, I think, will assess that, and if they see it as still staying embedded, I think they'll still be buying, looking for the upper Bollinger Band. In the cotton market, you've got 3 days in a row of just stalling out after a big move to that 18-day average. I think it's consolidating. It's trying to figure out, what do I do? The areas where cotton is grown are doing great. They've got the right temperatures, they've got the right moisture levels. So can this market hang on here is going to be the big question. It's had a heck of a ride. In the cattle, wow. The cattle market yesterday, as you can see, made its challenge of the lower Bollinger Band area. Momentum was flat, yet a higher high, a lower low pattern. You tried to rally early on today, which made all the sense, and then the grain market caught on fire. Game over. When that market let go this to the upside, it exploded. This market all of a sudden just said, now you've got a problem, because you had enough sideways action that you could drive prices even lower than this. Same in the feeder cattle. You've got the market that failed against the 18-day average, and that's clear. Does that mean you sell under Bollinger Bands? Well, I don't come in here and tell you to buy or sell at any number. I talk generality of the market. I can tell you in my charting course, I do not teach that you go short under a Bollinger Band or over it. More times than not, if you study what the chart does, you'll see that that makes sense. That doesn't mean you're not looking when you get away from that band to do certain things, but it's understanding how to work with it. The rationale there, 95% of the time the market will stay within the band. So the question is, when it comes out of the band, what kind of pattern did it come from? This was pretty much a sideways pattern. In the hog market, surprise, it held again. It held the Bollinger Band. So that's now about 4 days in a row here. And notice the 100-day average has been offering the resistance. I am not saying this chart is bullish. You haven't heard me say that. It's got lower highs, lower lows, but there's plenty of divergence going on. You have an oversold market that's trying to correct. If you were to take out this 88.32.5, you could argue then that the market's got higher lows and a higher high. because it's under the 18-day average, the filter would still be bearish, but you'd have to close over that number 90 to be friendly. Don't know if it can happen or not. As I see it, bears still have control, and they'll be looking at that 88.32.5 area, in my opinion. So what I was talking to you about was the charting course, because I rarely put this on sale. I do, but it's rare. And then the penalty is, while I drop the price on a sale, I'm dropping it from a higher level. Do we understand that? So the course is normally $169.95. And the idea of the course is you follow along exactly doing what I do so I can teach you the basics. Yes, we're going to start on older data. Many times I'm going to cover the name of the data. You're not going to know what market it is by my design. I want you to learn patterns. That is the important thing. And I'm not talking chart patterns. I'm talking technical patterns, because if you can't do it technically, you can't do it. What do I mean by that? I'm going to look at numeric technical studies. We're going to do first the swing line, because it's going to look to see, is the current day got a higher high, a lower low, an inside day, an outside day, up or down. You're going to learn how to draw the lines yourself, so you can look at any chart and you're going to visualize what it is. Moving averages are both filters of the swing line, and they can offer support resistance zones. Slow stochastics are momentum. I believe that momentum often leads price. It's not every time, but often. Bollinger Bands, the theory there, you'll trade within the bands 95% of the time, but where do you find the sideways action? How do you know if you're breaking out and going to hold? And that comes in part with using window envelopes and understanding the importance of them, and they are only a profit-taking tool. So there's 5 steps. I don't think you're going to get confused with 5 steps, and I certainly don't cover those here in this video. This video is meant to be just a broad, what is the market doing? What is the trend is looking as a chartist? So you're going to get access to 54 charting videos, 6 hours worth of videos. Next, you're going to get the charting software. Ideally, I'm assuming you haven't used our software. We have 2 versions, by the way. One is web-based. The other is a Java-based. You're going to have access to my morning video, which by itself is another $15 a month. That's thrown into it. And my research, which is $60 a month. That's how much I charge for my written commentary, access to my videos, and all the other things that I do. From there, we put together an idea. Now, often, I will hold also webinars. You're going to get your invite to it. And the course itself, $99.95. So how do you get it? You get it by going to our website, go under the word education. It's going to explain itself right there, and you can get it. No coupon needed, none of that. You can call my staff. They'll help you right on the phone, take all your information and do it. And remember, after tomorrow, at the close of business, this course goes back. It doesn't go up to 169. It's going to 179.95 to close of business tomorrow. So probably the last time I'm going to talk about this, I'll go back to my video ads. Take advantage of it. I'm Ira Epstein. You have a great night, and I will talk to you.